and welcome to Stock Market Today. Ali Corum and Ed Carson here with a breakdown of the action in today's session, where we saw a bit of divergence, Ed, amid spiking bond yields.
Yeah, the Dow kept on rising. Well, the Nasdaq sold off, though it did come off lows, but I want to take a look at a few stocks that were doing well and from sectors that are doing well. General Motors, Raymond James Financial, and EOG Resources all moving into buy zones today.
All right, well, we will do that. First, let's take a look at the major indexes, starting with the NASDAQ, falling about 1.3% for the day. We also had the S&P 500 slightly lower on the day, down less than 0.1%. Same for the Russell 2000. But on the upside, as you mentioned, Ed, the Dow up about 0.6%. So even though we did see the NASDAQ down today, we did close off of lows and a bit of support at these converging moving averages here.
Yeah, it looks like we closed just above the 50-day line, I guess the 21-day line. So that's a positive. I mean, we'll have to see. Can it hold there? I mean, if it does, then maybe this is a nice little shakeout kind of situation. But definitely yesterday we had some underlying divergence because the software names, some of the really highly valued PE stocks or the stocks that don't have any earnings at all, those sold off. But today you saw the chip sell off, some of the EV sell off, just more of that traditional. But you had a lot of other things going on. So the NASDAQ got hit, but then you had banks and energy, traditional automakers. They were all rallying today, so and pretty heavily. So it was pretty divergent day for sure.
Yeah, exactly. Some of the themes that we saw yesterday carried over today, but in an even more pronounced way, as you said. But there were buying opportunities that we saw in energy, in financials, for example, many of them extending their gains today. But again, a big driving factor is the 10-year Treasury yield. So up again today, Ed, and right around its highest levels, going back to October and then again in November. And where do you think we're headed from here? Looks like the trend is going up now.
Well, this is going to be, we're at key levels. I mean, when we've gotten up to this level, 1.7 is basically, that's sort of been the area for the last several months, just underneath it. So we're coming right up there. That's what's driving it. And one of the things is like, so much of the market is being driven by the bond yields, and you're seeing all this sector rotation. But if the yields hit resistance here, you could see all those trades reverse once again. So, I mean, if you were hoping to put all the sector rotation and the choppy markets, divergent markets behind us in 2021, well, they're certainly carrying over to the start of this year.
Yeah, and a quick look at the other major indexes. So here's a look at the S&P 500. So holding tight at highs. We also have the Dow. I don't know why I'm not typing it quickly. Here we go. But you can see the Dow. It looks like it's breaking out today, basically. And then we have small caps, as we can look at with IWM, the ETF, above the 200-day, but now hitting resistance at the 50-day. Looks like maybe Brett heading in the right direction here a little bit, but software taking a big hit. So this is the IGV tech software ETF, trading around its lowest levels in quite a while and in a downtrend at this point, Ed.
Yeah, that's pretty ugly. And that's actually, it's dominated by Microsoft in many ways, which is not having a good week, but nothing like this. So some of the last big names that did well at late 2021, they're giving up the ghost. Like the lone wolves, it's like, well, can they lead the charge, or are they just going to fall back? And I guess we got our answer. So this was an area that's really weak right now, and it's a bad sign for the market to have such a powerful sector. And you just have to recognize it. I mean, it's like, oh, I love software. Well, you can't love it now. This is not a sector to be that is working right now.
Yeah. And Tesla had a very strong day yesterday, but it was Ford and GM that took the reins today. So GM powering higher and breaking out. So moving up Monday in sympathy, seemingly with Tesla, but a powerful move here today from GM, up about 7.5%, with better than expected Q4 US sales.
Yeah, really big drop versus a year ago because of all the chip woes, but they were better than expected, and they see some improvement next year. So that was a positive sign. Yeah, there was a trend line break there, either ignoring that big day or including that big day. Either way, you probably could have gotten it, so you could have crossed it yesterday. That might have been the best time to buy it, especially given that it's run up straight from the bottom. I mean, that's So now it's gone from, 53 or so all the way to 66. That would be a pretty big, technically 65.28 is a buy point. So it's getting above there. But, that's awful. You might expect a pullback at this point. That would just be, wouldn't be a surprise.
Right.
And maybe it keeps running, but you just have to watch out for that. So if you did buy it off of that, be careful about that.
Yeah, and looking at this weekly chart, I mean, there was resistance at this, right around this breakout area, going back to even the beginning of 2021. So a seemingly significant level for it to clear after taking a lot of time off, looking like a laggard versus Ford, but a big move here this week. And with that early entry, that's a great way to get in when you see turbulence around the traditional buy zone, like we have been seeing so much over the last year. But we'll see if GM can continue this hot streak. And another strong area today, financial sector. So let's take a look at RJF, Raymond James, which has been on our watch list as it has been setting up in this base and a little bit of a pullback recently, but moving out of the buy zone, or above the buy point, rather, I should say, still in the 5% buy zone, but in a pretty big way today, some above average volume to accompany a 4% gain, Ed.
Yeah, this was a pretty powerful breakout. Nice move. The relative strength line getting above highs here. So a lot of nice action here. It's not a traditional base on base because the sort of prior breakouts sort of failed, but it's sort of been stair stepping, a little bit over the past few months. But that's okay when the market doesn't do so well. That doesn't look so good when the market is racing higher, but when the market is sort of struggling, stair stepping and breakouts is just fine. The only issue is maybe that earnings are supposed to be, down this year after a really powerful 2021. The fiscal year ended in September, but a lot of stocks are like that. To be honest with you, there's a lot of names where it's like these tremendous gains for this year, and it's like, well, then the earnings are going to be basically zero or down this year. So it'll be interesting to see how the market reacts to that as the year goes on.
Yeah, and yet another breakout here. Ed, is this going to be the year that breakouts work? Or should investors have a little bit of a chip on their shoulders from what we saw over the last year of trade?
I'd still be nervous, especially with the fact that we have the market divergent once again. I mean, that's the same kind of thing. You could have that rotation right away. And I don't know how much Raymond James is that affected by interest rates, unlike a lot of banks. So if bond yields come down, this one may not tumble, which is one nice thing about it. But still, it's like you just don't know if the rotation is there. And so is this the end of its run? Because it's just sort of like GM, it's sort of raced from the bottom. Not exactly, but it basically came up from the bottom. So is it time for a rest? It could easily be a rest. That's just a difficult situation.
Mm-hmm. And the other theme we want to hit on today is energy. So here's a look at EOG resources, up about 4.6%, breaking out of a cup with handle base. And this buy point is kind of like an early entry, I guess, because it's not breaking out to highs here with where this handle formed.
Yeah, I mean, I'll be honest, to my eye, it almost looks below the midpoint, but it is above the midpoint. The midpoint of this handle is above the midpoint of the base. So that makes it valid because there's a lot of stocks today that are breaking out, doing things like this. Yeah, basically breaking the trend line or breaking above the 50-day line that aren't technically handles. So it's not an official buy point. So this is a bit of an early entry. So decent way to go. Yeah, it's not the first. There's been a couple others that have gone out, but it's not way behind. It's not lagging tremendously. Energy is definitely working right now. So that's a positive sign. I think people feel like Omicron ultimately is not going to be a huge deal and energy prices are going to be pretty strong, but it's always tied to the underlying commodity.
Yeah, right. You are, Ed. Well, a couple of breakouts today to keep track of to see if there could be any foreshadowing as to how the market is treating breakouts this year and all of this rotation that we are now once again seeing. Thank you, Ed, for your insights today. And everyone, be sure you tune in to Leaderboard Scorecard if you are a subscriber or trialist. We have our monthly webinar coming up here in less than 20 minutes. So go on over to leaderboard.investors.com and click on the link in the top banner to join, to not only get a breakdown of the performance in December and strategies that the team took advantage of, but also a look at how the year went. Justin, we know he's great at putting spreadsheets together, so he came up with some good info for us to break down how performance went throughout the year. So it should be great, and we'll see everyone there. Thanks so much for tuning in, and we'll see you right back here tomorrow.